Hi, it's Brent MacIntosh from Remax River City. Thanks so much for clicking play. I've taken my whiteboard on the road and I'm outside a couple of Canada's largest banks. And we're not here necessarily to talk about the banks, but I did want to have them in the backdrop because I wanted to talk about mortgages and more specifically interest. The interest that you're paying on your mortgage. And I thought I'll give you a little tip of how you might be able to save quite a bit of money. On average, let's say for a house here in Edmonton, purchase price of $400,000 and a down payment of $80,000, 20%. You're looking at a mortgage of $320,000. Now, mortgage rates are constantly going up and down, but what if that mortgage rate was 3% for the next 25 years? Your monthly payment would be $1,517. That interest that you're going to pay on that $320,000 mortgage over the next 25 years is going to be $135,242. So essentially, 25 years from now, you're going to pay $535,000 for that $400,000 house. Now, 25 years from now, that house is probably going to be worth that, but let's save you some dollars in the meantime. Let's just say that you did a bi-weekly payment instead of a monthly payment. So what that means is that your payment would come out of your bank account every 2 weeks rather than once a month. What that equals is actually one extra payment per year. So instead of making 12 payments on your mortgage, you'd actually make 13. With that bi-monthly or bi-weekly payment, you're looking at essentially $758 every 2 weeks coming out of your bank account. What that means more than anything else is you're going to save about 2 years and 9 months worth of payments because you're going to pay off that mortgage in 22 years and 3 months just by making that one extra payment essentially per year. Compound interest can work for you and can obviously work against you. So by making that bi-weekly payment, you're cutting down that interest a lot faster. So the interest, instead of paying $135,000, you're going to pay $118,579. That's a savings of basically $16,663 just by changing the way you do your payments. What if you had some extra money? You had 2 incomes in your household and you wanted to get a bigger jump, and maybe you put $500 down extra per month on your payment. Or if you want to use this on whatever mortgage you have, perhaps your mortgage isn't $320,000, just basically add 33% of your mortgage payment to your mortgage and it'll get you the same math. So by adding the 33% to your mortgage, your payment, instead of being $1,517 per month, is going to be $2,017 per month. Here's the biggest difference. You're going to pay off that mortgage in just under 17 years. It's going to be 16 years and 11 months to pay off that mortgage. Interest, $88,000 basically, is what you're going to pay over those 16 years and 11 months. The savings to you, you're going to save over the course of this mortgage $47,148. That's money for you rather than giving it to one of these big banks. What if you could add $1,000 per month to your payment, or 65% of your current mortgage payment? Well, we'd be looking at 12 years and 10 months and interest of $69,687, a savings of $65,555. Over $65,000 you'd save from this interest and time. You'd be paying off the mortgage in half the time. What if you could double your payment? Instead of paying $1,517, what if you could pay $3,000 per month? You'd shorten your mortgage down to 10 years and 3 months. Interest, you'd only pay $51,000 in interest. That's it. The savings, over $83,000 you'd save. Absolutely incredible if you could double your payment. If you have any questions, we're never too busy for your your questions, and I love to help. If you've got a great mortgage specialist, they can go over this with you. If you don't have one, we have lots that we can recommend. And then there's always those naysayers that say, well, that's why I rent. I thought I'd give you the math on that. Let's just say rent never went up for the next 25 years. A $400,000 house here in Edmonton should rent for at least $2,000 per month, probably a little bit more, but we'll use $2,000. Over the course of 12 months per year and 25 years, that's $600,000 you'd pay in rent and get none of it back. So ultimately, if you even just had to stay on this original path where it took you 25 years and you paid $535,000 for that $400,000 house, you'd still be way farther ahead than renters. I'm glad you watched. Again, call us if you have any questions. We're at 780-464-0075. Have a great day.